Good afternoon and welcome to the BEEKS Financial Cloud Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Gordon MacArthur, CEO. Good afternoon to you, sir.
Thanks, Alessandro. Good afternoon, folks. Gordon MacArthur, CEO and founder of BEEKS Financial Cloud.
Good afternoon, everyone. Fraser McDonald, CFO of BEEKS. I've been with BEEKS 6.5 years and current role for the last 4 years.
All right, so I've got 6 or 7 slides that I'm going to go through in terms of last year and what do we do. I'll kind of go through that high level. I'm going to pass over to Fraser, who's going to go into the financials in more detail, and then we've got Q&A at the end. So if there's any questions, just type them in as we go through. So review of last year, it was a big year for us, I think, a record year. It was, I guess, in terms of revenue, probably not a huge amount of surprise, given that we'd done a trading update very recently, and there was 3 broker forecast upgrades in our second half of the year as we'd kind of signed some large deals, mostly in the second half of the year towards the end of our financial year of June. So revenue was up 57%, committed monthly run rate, which is our kind of key metric of the health of the business, i.e. what have we got committed from our customers. That was at 19.3 million at the end of June, and our EBITDA was up at 6.3. I think we made a couple of announcements on Monday on results day where just to show that some of the a couple of private cloud deals, not massive, but decent size to kind of show that we're continuing to grow that monthly committed run rate towards the full year forecast for this year. So just a minute or two on what we do. So for those of you who don't know us that well, BEEKS Financial Cloud, we're a cloud computing play for financial capital markets only. So we provide compute connectivity and analytics for trading firms or financial services firms and key data centers around the world. We've got 3 different product lines that I'll cover in a little bit more detail as we go through the presentation: public cloud, private cloud, and proximity and exchange. So this slide, those of you who've followed us for a while will have seen this slide evolve. So this is a footprint of where our public and private cloud deployments currently reside. So I think we're in about 24 data centers around the world. Good geographical coverage now. London's our biggest physical footprint by quite some way. We've got 6 data centers in London now, supporting various different clients. We are going to be going into further expanding in Canada this year, along Mexico as well as a definite to support a partnership with IPC. And we've got potential expansions in Spain and the Nordic regions. Also looking at potentially India, depending, it's kind of client specific. So as you can see from the map, we've got good global coverage where if people want us to use our public cloud or share cloud, or for us to deploy a private cloud for them, then we can do that in any of these locations that you see on the map. The dotted line between the locations is our wide area network or backbone, where we can transit traffic from any of the data centers to any other data center around the world in a secure, low latency manner. So why do people use BEEKS? It's no different from any other cloud play. Why are people embracing cloud computing? It allows people to flex their business and change their business quickly depending on the demands of their market. So it gives clients, agility. We are in all the locations or a lot of the locations that people in our world expect. So we've spoken previously about the fact that we pick our data center strategically to be directly connected to exchanges, banks, brokers, FX venues, whatever they may be. So if you are looking for these specific data centers, we can certainly help. Our cloud is fully integrated. You can come and peel off infrastructure from us in real time rather than doing it yourselves. Fully supported by our knock up in Glasgow 24/7. We've had quite a sizable investment in headcount this year. We're just over 100 staff currently. 60 to 70% of our staff sit up in Glasgow. Our software development teams, our network engineering teams, and our back office functions. We allow people to deploy infrastructure on an OPEX model, right? So rather than spending hundreds of thousands or millions of pounds or dollars in CapEx, you can do it on a month-to-month cost with us. So it's no different to any other cloud play, right? There are reasons why people no longer want to do their own infrastructure and want to utilize cloud computing. So this slide just kind of further on our products at the moment. So we've kind of evolved as we've grown more materially over the last couple of years. So we still have a kind of public cloud part of the business. It's less than £1 million of turnover, I think now, less than 5% of what we do. And we've said for the last few years, it's not really that strategic to the business. Where the growth in the businesses is in the three other areas. So private cloud is where we will design a private infrastructure for a client's sole use. And that has many different flavors, right? It's always exclusive use of computing power. They may take some level of shared networking and shared connectivity, but we take a client requirement for an infrastructure in capital markets and design a solution for them that they sign off, commit to, and we go and deploy. Still the largest part of our business by quite some way. And then we released Proximity Cloud about 18 months ago now. So I think it was about 18 months ago. So Proximity Cloud is aimed at larger customers, right, who are more interested in complete dedicated infrastructure that can reside in their own space in an Exchange's data center. So it's not hosted by BEEKS. It can be, but usually customers want to put it in their own space so that it's under their own security model, serviced by their own engineers, but they still get a cloud platform that comes with all their orchestration and automation tools and the inbuilt analytics. So that was released a year and a bit ago, I think, from the full year report. 12% of our revenue is coming from the Proximity Cloud deals that we've done already. And then the last product line is a kind of pivot or a derived version of Proximity Cloud called Exchange Cloud, which still has the same underlying technology, but is aimed at being used by exchanges for two different real business cases. The most popular one is for them to provide a multi-homed cloud environment in their Exchange data center that they sell as a service to their clients. The other one is, for the exchange to use themselves for, global market data distribution or trade matching or anything workloads that they have internally. So we, Exchange Cloud has been getting built for the last year and a bit on the back of a partnership with one of the largest exchange group in the world. So we announced a few weeks ago that ICE Global Networks, part of the ICE group, which owns New York Stock Exchange and various other exchange technology functions, have licensed Exchange Cloud exclusively as a cloud play for their global locations. So, a materially large endorsement in the technology was a year and a half to nearly 2 years in the making, from first conversations with the exchange to getting the platform live and the press release out a month ago. So major endorsement in the technology stack. It's gone through, as you can imagine, all sorts of security testing, performance testing, all that type of stuff to win that piece of business. So that is a product set as we go forward. We will be investing further as over the next couple of years drive these products forward. I don't see at the moment another new big product release in the pipeline. I think we've still got a lot of work to do to enhance feature function on both Proximity Cloud and Exchange Cloud, from the current states to where we want them to be. And we've got a full product development roadmap that kind of goes out over the next 18 months. So the Exchange Cloud opportunity is a really exciting space. So previously, all the big equity exchanges, the majority of the big equity exchanges all own their own data centers, right? So they have their matching engine in a building that they own, or they bought a big part of. And previously, if you want to trade on that exchange, you would go and buy an empty rack from the exchange with power and space, and have direct connectivity into the exchange matching engine. What Exchange Cloud does is allow the exchange to carve off a part of that data center, a number of racks, however many it may be, and BEEKS will deploy a cloud platform in the exchange data center connected directly to the exchange themselves. The exchange then can sell it as a service to their members and their clients, where they can peel off in real time, dedicated compute, virtual machines sitting under a low latency network with full inbuilt analytics. Based on the analytics product we bought a couple of years ago, we've spent a lot of time, money, and effort improving that solution and integrating it into the Exchange Cloud and Proximity Cloud UI, so that it gives clients of the exchange and the exchange themselves, or the customer themselves, the ability to have real-time latency monitoring, what's called microburst detection and gap detection, so that they can see if there's any problems in their feeds from the exchange. It's really interesting because there's not really a relevant competitor in the space. Some of the hyperscalers do have private cloud type racks. However, they really struggle with some of the underlying technology that is relevant for an exchange. So particularly multicast data, precision timing, and they really don't have the analytics capability that we do. So, we won ICE. We're in a number of conversations with other larger exchange groups and some mid-sized exchange groups throughout the world to replicate that deployment, i.e. for BEEKS to be, the cloud provider, private cloud provider in the exchange building. We license it to the exchange, so it's effectively a white label. We sell it once, and it's up to the end of the exchange to sell it to the members. Why that's interesting is we then no longer have to worry about end client MSAs and procurement exercises. All of these customers are already papered with the exchange or are going through a papering process, so they just see it as an extra service potentially on the exchange order form. So you can buy, the markets you want access to. You can still buy, empty racks, or you'll be given the ability to buy BEEKS infrastructure, cloud infrastructure, a number of servers, a number of virtual machines, and analytics. So, it gives us access to a very large pool of customers, but ultimately we've got a single client, and that's the exchange. Some of these exchange data centers are, fairly sizable, with up to 1,000 racks of customer equipment in them. Roughly, it depends what we put in the racks, but we price it per rack per month over a fixed term, and that can be anywhere between 750k to £1 million of TCV per rack. Just depends what's in there. So, you start doing the maths on some of these larger exchanges. There's a very large footprint for us to attack, and potentially get some very large wins there. So, exciting product. We've kind of found a very lucrative niche with it on the back of designing it, with ICE and with input from some of the other exchanges that we've been talking to. So, we've got high hopes for it going forward. I think Proximity Cloud has done well since we launched it last year. We signed 5.2 million of contract in the standalone Proximity Cloud technology since its launch. We've got a good pipeline of opportunity going forward. And really, Proximity Cloud is for a single-use client, right? Exchange Cloud is multi-homed and can be carved up to to accommodate securely a number of different clients. But Proximity Cloud is for a bank, a broker, an investment manager, a technology firm for their own use, and that's the kind of difference between the two. Proximity single use, Exchange Cloud is a multi-home platform. Again, these are all multi-year deals based on how many racks of equipment a customer wants. Fraser will cover the revenue recognition. It's different to our kind of public cloud and private cloud, but we will call it out separately as we go through the numbers over the next couple of years. So over to Fraser just to talk through high level some of the financials.
Right, thanks, Gordon. Just covering some of the key metrics during the year. As Gordon says, it's been our biggest ever year in terms of sales growth. So we're up 57% on last year. Historically, over the last kind of few years, we've typically grown about 25 to 30%. So really sort of double that growth for the current year. The key kind of drivers behind that really around the size of the deals that we're winning now. So going back a couple of years ago, we announced our first ever $1 million contract. We now in the current year we have multiple deal sizes of that range, and some higher. So I think one of the biggest contract wins was over 4 million. So we are getting larger deal sizes from both existing and new customers. That revenue growth is all organic. And as I say, driven really by the bigger deal sizes. And as Gordon says, some of these Exchange Cloud deal sizes that we have in the pipeline again are even outweigh those. So in terms of Gordon mentioned it earlier on, our committed revenue. So again, key metric, it allows us to kind of forecast ahead, what's committed on the books just now. So we're over £20 million committed for the year. I think if you look at the consensus forecast for this year, it's between 24.5 and 25 million revenue. So 80% of that is largely there. It doesn't take that many additional Proximity and Exchange Cloud deals layered on top of that to get to the full year number. As Gordon says, we had 3 forecast upgrades in the current year. I'll just go back a wee bit. You moving my slides, Gordon? I think in terms of profitability, again, depending on what profitability metric that you look at. So EBITDA is up 52% to 6.3 million. Underlying profit before tax is up 28% to just over 2 million. We did have a reduction in operating profit margins against last year, as we anticipated and as was forecast, given the level of investment that's gone into the business. As Gordon says, we've now got over 100 staff. We've been on a big recruitment drive over the last couple of years. We believe the sort of right size skilled team now to execute and to continue to build out product. We have around a third of our staff are in that product development space. Headcount is one of our, if we're looking at profitability and managing that's one of our key metrics that we look at. It's about 30% of sales just now. We still have a relatively low cost model up in Glasgow. Our average cost across all our staff is 63k, and that includes board members. So it does allow us to potentially manage these margins. I think going forward, controlling our headcount, as I say, is our biggest area when we look at profit margins. We will not expect to grow the team to the same levels based on that revenue growth we've seen. So if you look at the year ahead, we'll maybe bring in about 10 or 15 people, to boost the team. But given some of that revenue expansion, we expect margins to start coming up if we control that headcount. We're also aware of other things going on in the world. The increased power charges that we're just getting note of from our suppliers. So we pay for power space connectivity across the data centers that Gordon presented in the earlier slides. So we've always done annual price increases to our customers, and we're in the process of quantifying what that power increase may be for us and how we manage that going forward. Exchange rates as well, given we have a natural hedge in terms of our exchange risk. We have about 45% of our revenues are in US dollars and about 40% of our costs. So we are largely hedged from that. We had a small gain in the year of about 80k, and we will look at how we hedge going forward. Just moving on to the next slide. So yeah, so proximity and exchange is different in terms of how we account for it. We spent quite a number of months with our auditors, Grant Thornton, to agree the principles. It's kind of more akin to a hardware and software type sales. So ultimately, we deliver a proximity cloud or an exchange cloud appliance, all pre-configured to the customer's data center, and because of that, that's quite a high proportion of our performance obligation to the customer, is what the accounting standards state. So you have to recognise about half of it up front, which this is accounting only. It's not cash. So it does give us a slightly different model going forward. We've always had that sort of 90% recurring revenue, which we like. So it does change things slightly. We hope, and Gordon, I'm sure will talk about pipeline, but the current revenue recognition in terms of recurring percentage in the year is 76%. However, the point to note really is we've still grown that. So our ACMMR is up 40%. So we'll have a combination of private cloud wins that will contribute to recurring revenue, and then layer on top of that the proximity and exchange cloud wins. The benefit of these contracts is they're high TCVs, as Gordon says, $1 million per rack, and there's thousands of racks out there that we are hoping to get a land grab on. They are long term. They're with tier 1 clients. We believe they have a slightly lower support model from us. So the infrastructure is owned by the customer, and it sits in the customer's own racks. So we don't have the power space connectivity charge that we would typically play in private deals. So we do believe from a support point of view that it should be a lower cost to support that, which is why if you look at some of the broker forecasts, we show a slight uptick in margin over the next few years. As Gordon says, we'll report it separately, proximity and exchange cloud, and pleasingly it was about 12% of the revenue increase this year purely from that new product. So again, key driver for the revenue growth is we have these multiple products now that we can sell compared to where we were a year or two ago. Just back over to you, Gordon.
Yeah, sure. Thanks, Fraser. So, objectives for 2023. I think we've talked about years of product and years of employees previously as we've, had to scale up the members of staff and build out product. This year going forward is going to be the year of sales execution, right? We have a pipeline that is substantial and much greater than we've ever seen before. So this is about continuing to develop the products. As I said earlier, I think Exchange Cloud, Proximity, and Private will continue to be developed, feature function added. So we are continuing to do that. And it's about converting the sales pipeline, right? Some of these deals, as I said before, just to kind of set scenes, a private cloud deal is anywhere from $1 million, well, $500,000 to, a couple of million. That we've announced private cloud deals at a couple of $1 million already earlier in the year. Proximity cloud deals can, be anywhere between 2 to 5 million. We think some of the larger exchange clouds could be between 5 to 20, not on day one, right? It's, the way that these things tend to happen is, they will start with a level of infrastructure as they build it up and fill it, then they'll come in and take more. So we've kind of got this variety in the pipeline now where we've got small deals or relatively small deals that can happen relatively quickly. In the private cloud space, proximity takes a little bit longer, maybe up to 6 to 12 months, and exchange cloud is anywhere between a year to 18 months. That's not to say we're starting now on the exchange cloud pipeline. There's a number of exchanges we've been talked to for over a year. So we will look at that sales execution as a priority for the year. we're a very partnership-led organisation. So, our biggest partnership so far is with IPC, and we've got a great relationship with them. We mutually bid on lots of business, win lots of business, and there's business between the two organisations. So we'll continue to grow that relationship. Obviously, with ICE now coming in, another large organisation who can sell our services, right? They've got lots and lots of salespeople around the world, and they will be incentivized to sell some of the BEEKS products. So continue to invest and grow strategic partnerships, and that's always the way that we've kind of taken ourselves to market. So yeah, just final slide, I think, on Outlook. So for people again that have followed us for since IPO, getting the referenceability of doing these types of platforms for large organizations who are happy with what we've done is worth its weight in gold. We now have quite an impressive list of clients that will reference us. We've got some case studies out in the public domain, obviously the ICE release. Having that referenceability makes life a lot easier for us when we're now talking to potential new clients around the world. We've got opportunity on private proximity and exchange, and as I said, they are on various sizes of deals, and the pipeline is more substantial than we've ever seen it before. If it all came in at one point, we might have a problem. It won't, but some of these it'll be spread out throughout the year. So I think we're in a very good position. The team have worked very hard over the last 2 years to get the products to a position they're in. The support teams and engineering teams up in Glasgow keep our customers happy, and that's why they invest more money with us. So the business is in a good position from a headcount point of view. The technical engineering function that we've got is stronger than it's ever been. We have to keep abreast of the macroeconomic things that are going on in the world. I mean, I think supply chains are still stretched. One of the big reasons that we took what turned out to be a fairly significant investment in the fundraise in April was to front buy a load of capacity. Right, we have enough physical capacity on site in our Glasgow stores that will get us to and slightly beyond the full year forecast. So, that was why we took a big chunk of investment in April, and you can see from the balance sheet there's a couple of £1 million worth of capacity sitting in Glasgow, waiting to pull down for these proximity cloud and exchange cloud wins. And as Fraser said before, power costs continually going up. We can pass the majority of that on to a lot of our customers. So while we keep an eye on it, it's not something that we're overly concerned about at the moment. Who knows what happens in the future? But so we do keep an eye on these things. But we're in a good position to weather the storm and both of the supply chain and the power increase. We continue to grow market share and wallet share from existing clients. I mean, I think as Fraser mentioned earlier, we signed our first $1 million deal 2.5 years ago. That customer is now spending over $8 million a year with us, and that's purely because we deliver platforms that work for them and help their business and allows them to scale. So we continue to try and expand our footprint with existing clients and win new. As I said, we announced a couple of kind of smaller wins in private cloud on Monday. That just shows that we are kind of marching towards that full year 23 number. I think our we're at 19.3 when at the end of June we're over 20 million committed run rate now on a 25 million forecast or broker forecast. So we've not got a million miles away to go. We're at the start of the year we're in a good place. So we hope that we kind of replicate last year where we get into the second half in a really strong position, and the broker will then look at where they think we are. And that was it from me. I think we've got some appendices that you've got access to, but we can go to Q&A.
Okay, Gordon, Fraser, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated on the top right corner of your screen. But just while the company take a few minutes to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. We received a number of pre-submitted questions today, and I want to start off the Q&A session with these. The first one reads as follows. What went less well in the past period, and where do you want to improve on in FY23, and how will you do it? Maybe one for you, Gordon.
What went less well? That's a hard question to answer. I mean, listen, we could always. I mean, my background sales, right? So I always want. Could have closed more deals. Yeah, I would have loved to have had an extra couple that's maybe kind of spilled into this year, closed before the end of the financial period, but. So be it. I mean, I think software development, we've invested a lot in our software development team. Scaling that, we have historically been an infrastructure provider. We are now half software, half hardware. I think we've had real challenges as we've scaled up the software dev team. The more people you add into a software development team doesn't necessarily mean productivity does that. Sometimes you get challenges with distributed teams and the amount of people involved. And so, we've had some challenges in software development that we've kind of put an end to and figured out ways of ensuring that productivity, no matter how much we scale that team, remains high. So, I don't think we're alone in that. It's not, especially coming from that infrastructure background. So, but we're on top of that, and we've seen real improvements in the last 4 or 5 months as we continue to grow that. I mean, it's been a great year, right? It's been a record year, so I'm not going to focus on what the negatives. There's not been that many. I think the team has performed incredibly well, and we've got real innovative products in the marketplace, and we a pipeline to support it. Fraser, I don't know, anything you got there?
In terms of less well, I mean, the audit took too long for me. I think you say, it's been an outstanding year. So it's sometimes quite hard to think of thinking back when what went less well. So yeah, I think it's been a bit of a blur to me the last few months. So yeah, nothing to add.
Perfect. Thank you very much. Maybe another one for you, Gordon. What kind of product development can we expect this year? Expansion of existing product lines, or do you expect to introduce new products / revenue streams?
Good question. I think I kind of briefly covered it in the slides. Our product development roadmap over the next 18 months is to build out feature function into the existing product lines. Maybe I'll regret saying this if we come up with something in the next year or two, but I don't expect another big, new product, new fork in our product lines. I think we have got enough work to do to try and extend out some of the feature function of private proximity and exchange. And Matt, our head of product, has got a roadmap that shows us doing that. There's some fairly, I don't want to go into the low-lying technical details of it, but we've still got some way to go and some of the product developments. But no, I don't expect any major forks. I might live to regret that statement, but yeah, not at the moment.
Thank you very much. Maybe one for Fraser here. Could you give us a bit more colour on one of the key objectives in FY23, for this investor, which is to see a return on investment?
Yeah, I mean, I think, as I say, we always kind of quite Scottish and tight the way that we run the business. We always have an eye on profitability. However, it's not as important as driving that sales growth right now, given the opportunity ahead. So, for us, as I say, controlling the headcount, writing good contracts that allow price increases, making sure our support model is such that, we are not adding lots of people to the business, which we're not, is really how we, drive back value to shareholders. We are aware we took a considerable investment in April, as Gordon says, and we want to deliver that return. So we may still see some short-term operating margin pressure, but really as we sign these bigger size deals and we get scale, we operate on a cost plus margin basis, right? So we're not concerned about eking out profitability and return to investors in the medium term. Gordon, is that fair? Anything you want to add to that?
No, I think that's a fair comment. No.
And then again, maybe just picking on the next question. So what sort of EBITDA margins? So again, we've kind of typically done about 35% EBITDA. I mean, operating profit margins, we've been up at sort of 15, 16, 17%. We're down right now, but as I say, if you look at the broker forecasts, I think we've been reasonably conservative and what they are showing and where we're comfortable in terms of coming up 1% per year. We should be able to deliver that given some of the deal sizes out there and what we think we can deliver in the year whilst controlling the cost base.
Perfect. Thank you very much. That's great. That actually concludes the pre-submitted questions, but we've received a number of questions throughout today's presentation. If I could just ask you to read out the questions and give responses where it's appropriate to do so, I'll pick up from you both at the end.
Sure, I'll kick off with it. So first question is, what plans do you have in terms of geographical expansion and in terms of pipeline? What is the typical length in closing contracts with customers? So yeah, geographical expansion, I think we covered it on the map on the first couple of slides. So we are looking at Mexico with IPC at the moment. We are looking at something in Spain, consideration for India on the back of a particular contract, and we'll continue to increase the footprints in our existing sites. In terms of typical length and closing contracts, it varies, right? I think again, I kind of covered a little bit of it. Private cloud, $300,000-400K to a couple $1 million type transaction, sometimes 3-4 months. Proximity cloud, that's a little bit bigger, 6 to 12, and then I would put Exchange cloud 12 to 18 months as a first conversation to system live and billing. So yeah, I hope that answers that. Thierry, could you please elaborate on your competitors? I mean, I don't really like spending much time talking about competitors. I mean, the hyperscalers, are the competitors to us? Yes and no. Most of our private cloud deployments connect to AWS or Google or Azure because the organizations have non-trading execution services or workloads in these hyperscaler clouds. We've got a couple of managed service competitors that kind of focus on our niche, but they're managed service providers. We're a cloud computing platform, so we're not really like for like competitors. We don't, we're not a market data company. So I mean, yeah, I mean we have competitors. I'm not going to go into talking negatively about anyone or positively about anyone. There are a couple of niche competitors, and we keep an eye on what the hyperscalers are doing. But they're not technically. There's still lots of issues about whether the generic cloud would ever be able to do large scale trade execution and high performance multicast platforms. What is the scope and length and impact of the period of exclusivity granted to ICE? Unfortunately, for NDA reasons, we have put out into the public domain all we are allowed to, right? It's a multi-year agreement with ICE, and there is a period of exclusivity as BEEKS being the exclusive cloud provider for the IGN business. I can't go into any more than that, I'm afraid, under NDA.
I'll pick the next one, Gordon. That's from Louise. How many staff are involved with software development? I mean, the software dev team, it's about a third now of the headcount, so it's about 35, I think, at last count. So yeah, about a third, and as we've built that up over the last couple of years. So we'll probably add some heads to it over the next year, but not massively.
Perfect. Gordon, Fraser, thank you very much. I think you've addressed all those questions you can from investors. And all, of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Gordon, could I just ask you for a few closing comments?
Yeah, of course. So I think, it's been a record year for the company. Material contribution from everyone involved. I thank them for the hard work and their efforts supporting the growing client base and keeping them happy and delivering innovative products. So, the business is in a good position. We start the period in a very strong place with a huge pipeline and what we believe is market leading products. So, excited for the next year or two ahead of the company and we get our heads down and focus on execution and an opportunity ahead of us.
Gordon, Fraser, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of BEEKS Financial Cloud Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.